The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Happy Friday. Welcome to another edition of Breakout Investing on TFNN. Wrapping up the week. It is beautiful day here in Southern California. Hope you're having a great day wherever you are. 877-927-6648. That is the number to use. Give me a call. Let's talk about this market. You can catch my show daily on TFNN from 3 to 4 Eastern. Head over to iTunes. Pick up the show as a podcast if you can't listen live. And don't forget to check out TFNN programming on your cell phone. Very easy to do. Just type in tfnn.mobi right in your smartphone browser. Very easy way to listen to the audio stream. Plug those earbuds in and have at it. And don't forget about Tiger TV. I always go over charts on the show, and you can look at those charts live right along with me if you're at your PC or even on your smartphone as well. But Tiger TV at tfnn.com is the show is carried live on Channel 1. It is archived on Channel 13. On your cell phone, same deal. Just open your smartphone browser, type in tfnn.com. Over on the top right-hand side of the home page, you can click a box. It's got some mobile devices in there. Just click that box, and it will start streaming right on your cell phone. All right. I'll tell you what. We woke up this morning watching pre-market futures bleeding, getting worse and worse and worse, and it was a pretty ugly-looking session there for a while. But these dip buyers keep coming back in, and it's hard to say how long that's going to last, because at some point it's not going to work. Sometimes these dip buyers are going to come in, and the markets are going to keep headed lower. I can't tell you if that's going to be sooner rather than later, or maybe there is more to this uptrend. But to me, this market does need to prove itself more. We are 4 days into a rally attempt for the NASDAQ composite. You can see that right here. Day one of the rally attempt was Tuesday, after that very bearish session for stocks to kick off the week earlier this week on Monday. So day one was Tuesday, day two Wednesday, and so forth. So here we are, day four. NASDAQ composite near its session high, up close to 8 points to 3168. Volume on the NASDAQ today, not too bad, actually. I think at one point we've been tracking higher throughout the session. Yeah, we're tracking about 5% higher than what we saw yesterday, which was above average at 1.91 billion shares. So a little bit of accumulation going on in the indices today. Not a great day for the market. Yesterday had sellers come in late and knock indices near session lows in higher volume. So nice to see a rebound today in what looks like it could be higher volume than Thursday. S&P 500, let's see what that index is up to. Large cap index also near its session high, up close to 4 points today to 1518. Volume on the New York Stock Exchange tracking about 10% higher than Thursday, which was also above average at 962 million shares. So when you have above average volume yesterday for the NASDAQ and the New York Stock Exchange, and now you have volume tracking higher than that today, that points to some accumulation. So, It is prudent to pay attention to the distribution that we've seen in the market since the middle of last week. It is important to pay attention to a lot of the wide and loose intraday price swings. You can see that right in the S&P 500. Again, starting last week, big intraday trading ranges, a lot of volatility. That can sometimes be seen near a market top, but all the while you have to keep in mind the S&P 500 has been able to hold above its 50-day moving average. NASDAQ composite we just looked at had a nice bounce off the 50-day, and let's finally take a look at the Dow here. We'll see the blue chip index also up near its session high, up close to 34 points to 14,088. So we've got the sequester. Looks like that's a done deal. Going to take effect at midnight tonight. President Obama had a press conference today. He called the automatic spending cuts dumb, inexcusable, unnecessary, more of the same on Capitol Hill. Republicans and Democrats just have their ideals that they believe in, and just very difficult to negotiate, and that's just more of the same in Washington. So these spending cuts are going to take effect. President Obama said it could trim about 1/2% off of 2013 GDP growth. So we will see. They will take some time to go into effect, but with these spending cuts, you're going to see job losses and some pain out there. So unfortunate that it's happening, but there was no effort made by no meaningful effort made by Republicans and Democrats to kind of strike an accord here. All right. Well, we are the first day of trading in March. What did the gains look like for the month of February? What was the best performing stock index in the month of February? If you guessed the Dow, you'd be right. Dow for February up 1.4%, S&P 500 up 1.1%, Russell 2000 up 1%, NASDAQ Composite lagged with a 0.6% gain. Taking a look at the U.S. dollar index today. Another day of strength for the dollar index. Right now trading at 82.31, up another 0.4% on the day. Let me go and show you this chart here that we have stored of the U.S. dollar index. Here it is. I got so many charts stored in here. Takes a while to find them sometimes. You think a breakout over a descending trend line doesn't mean anything? Well, it did this time around. You can see what the dollar index did after a breakout over a descending trend line. It has actually, you're talking, let's see, 1, 2, 3, 4, 5, 6, about 9 trading sessions since the dollar index broke out over that descending trend line, and moving higher again today. This chart is as of Thursday's close, where it ended at 81.95. Like I said, up again today to 82.31, up another 0.4%. April gold ended the week at 1572.30 an ounce. 1572.30 an ounce, down another $5.80 or 0.4%. Lowest close since July 2012. April crude oil down $1.37. 1.5%, settles at $90.68 a barrel. Bond yields lower again. 10-year note down to 1.85%. 30-year bond at 3.06. Check in on shares of Apple because it hit a new 52-week low today. Shares of Apple down 2.3%, $10.19. Last trading at 431.21. This January 25th intraday low of 435. That is what was in play here, and Apple has undercut that. I think if we pull up a weekly chart here of Apple, we'll see that it basically has now is paying a visit to its last breakout area. You can see the breakout back here in early 2012. And you can see Apple, that's basically where it's come down to. So those saying that the selling pressure may be starting to abate a little bit in Apple, I could actually see that argument, because stocks, when they after they break out, you usually see a stock come back down to a prior breakout area. In Apple's case, obviously the selling has been pretty intense. So it is going to take probably a significant headline for Apple to put in a bottom here. So with all the selling and the fact that it did undercut its January 25th intraday low of 435, I would expect to see more downside here. But again, the last breakout area for Apple was, let me just get the specific price point here. Let's see, the breakout was in late January 2012. But you're talking, 422, 425, 426 in that area. So maybe a little more downside here in Apple, but we'll see if it can eventually start to firm up here. Not a stock that I'm interested in owning at this point. There was a headline around Apple today that David Einhorn withdrew his lawsuit against Apple. He won an injunction last week that blocked Apple from moving forward with a shareholder vote on a proposal that would have limited the company's ability to issue preferred shares without a shareholder vote. So Einhorn withdrew that lawsuit. Still unclear what Apple's going to do with this big cash position. Some people, big institutions, want them to expand their dividend share buyback. Einhorn was talking about these iShares, maybe that yields somewhere in the area of 4%. So something's going to happen at some point, and when it does, it probably could, result in a dead cat bounce for Apple. But still, clearly, with markets acting well today, Apple can't get out of its own way. Let's check in on the financials here today. The XLF, they had been lagging the market, and we'll see the XLF actually, after hitting a low of 1736, up near its session high at 1766, up 7 cents on the day. So good support so far for the XLF at its 50-day moving average. Not too bad, because earlier today it was Goldman Sachs that downgraded shares of Deutsche Bank to sell. Deutsche Bank taking it on the chin here, down 4.6% today to 43.64. Apparently there are new capital requirements for overseas banks that could be a problem for Deutsche Bank. That was the reason for the Goldman Sachs downgrade. But by and large, financials rallying back with the market here. So JP Morgan Chase, we'll see that it is still holding nicely above its 50-day moving average, up 18 cents today to 49.10. And I still like a lot of these asset managers here. Let's take a look at BlackRock. BlackRock still holding above its 10-week moving average here, working on 2 straight weekly price declines, and its 10-week moving average is at 231 basically. BlackRock right now trading at 236.79. So we could see, pull back to that 10-week line, and it's a strong enough stock where I wouldn't be surprised to see it find support there. SEI Investments, excuse me, another strong performing asset manager. We've been talking about this one in recent weeks because just how bullishly it's holding gains. You can see 3 straight weeks where it's just not giving up any ground, not threatening its 10-week moving average at all. SEI Investments looks very strong, another asset manager. And finally, T. Rowe Price, TROW, has come down to its 10-week moving average, but this is a weekly chart. Last trading at 71.70, its 10-week moving average at 70.81. So financial stocks in general still looking pretty good here. That's definitely a feather in the bull camp. Headed into break number 1, folks. I hope you're having a great Friday. Stick with me. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
North to Ottawa, Canada. Talk to Radesh. Happy Friday, Radesh. How are you?
Yeah, happy Friday, Ken. Doing good. How are you?
No complaints. It's Friday. Got to be happy on a Friday.
Exactly, and it's pretty cold out here, and I'm looking forward to the weekend, so it's pretty good out here.
Yeah, I was just saying, we're kind of making our way through the wintertime here in California, but we're a solid, we're over 80 degrees here with beautiful sunshine, clean air. It's a beautiful day out here.
Out here is -2, and we got like 30 centimeters snow on Thursday, but very pleasant, very pleasant.
One extreme to the other.
Yep.
What can I do for you?
I had a question today about Celgene. I've been holding this stock since January, and what happened to the stock is that it ran up 20%, and it was consolidating around that $100 mark.
Yeah, it was really trading beautifully. Yeah.
Yeah, and then yesterday it kind of broke through the resistance level at 103.29, and I added some more positions, yesterday. And my question to you is that would you think this is like one of those 5-week flat base pattern which broke out, or what's your take on this one?
Yeah, no, I think that was a totally reasonable area to add to the position. In fact, congratulations for buying it right and sitting on a nice gain, because that's what you always want to do is when you latch on to a leader like this, buy it right initially and then look for opportunities to actually average up in your price, not average down. Most people like to average down and throw good money after bad. So you bought right, you saw that sideways consolidation around 100, and you saw the volume came into the stock yesterday, so I think that was a legitimate buy, and my only concern right now is this market. It's just not clear to me. This is a high enough quality name where I think you're going to be fine with it. Obviously, it showed great supporting action right around that $100 level, and biotech's acting very well right now. I think overall it's a very sound play. The issue, as you know, is that we are dealing with a market that has been showing signs of distribution, but by the same token, when you look at the weekly charts for the NASDAQ and the S&P 500, they don't look too bad here. So, getting additional follow-through in this market is not out of the question. And if that happens, a name like Celgene should continue to work nicely. So I don't have any problems at all with how you've handled this stock, including the adding to the position.
Yeah, just 2 quick points, because today the indices, they were 100 points down, and then they did a pretty good upside, And the other thing about Celgene, I was looking at some stocks, like the AOL in 2000, and they had the 8-week, hold, and then they went on to make those monster gains like Hansen Natural. I don't know if Celgene will do that, but, the whole key is to wait. And, since I had that big question, I thought, let's add on because I have nothing to lose, And today, as you mentioned, the action was pretty good. It's just that, we need to wait for the follow-through to go through. But,
I think that this is a legitimate company, and it definitely falls under the category of a market leader, and that rule that you followed, a 20% gain in a period of just a couple weeks. You want to hold it for at least 8 weeks, and I mean you were fortunate with Celgene because this is a stock that really didn't give you any sloppy volatility after that big move back in January earlier this year. It really behaved itself. A lot of these growth stocks, a lot of them won't behave themselves. They'll try to shake you out, and there'll be some volatility after the breakout, especially when there's distribution in the market. But Celgene really behaved itself and just kind of formed a nice little flat base here. And I don't, this one is not acting wrong by any means. And LinkedIn, LNKD is another one that is just has really been an easy stock. Not acting poorly at all.
Yeah, absolutely right, Ken. In 2007, I had some problem hanging on to potash, and before the Hansen Natural, so I learned my lesson.
Yeah.
So I'm pretty careful nowadays, not to take my profit early. But I think Celgene is working pretty well. But
good for you. Good for you. I think you got a good one there. Let's hope we can get some. Like I said at the top of the show, day 4 of a rally attempt for the market. Probably not going to see follow through today, but it's not out of the question that we see it next week. And we also have to be open to the fact that the recent distribution that we've seen in the market, we could see more of it. So it's just kind of just keep paying attention to price, volume, and the major averages.
Okay, great. Thank you, Ken, and have a nice weekend.
Okay, same to you. Thank you.
Okay, bye then.
All right. Joe, my man, always like talking to you. And this segment was a short one, so if you wouldn't mind holding on the line.
Hold on, Ken, no problem.
Okay, thank you. And we're going to talk Five Below, recent new issue that continues to trade well in this market. We'll talk to Joe when we come back. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. 877-927-6648. Let's go to Boston, Massachusetts. Talk to Joe. How you doing today, Joe?
Ken, I'm doing well. How are you?
Good. Good to hear from you again. Things good?
Yeah, it'd be nice if I had a tea time at Riviera this afternoon.
I got to play one golf. I don't know if I played one round at Riviera for my it was my well, I won't say which birthday it was, but my wife got me a birthday present at Riviera, and it was fun standing on that first tee way up above, and pretty easy par 5 that first hole, though. I didn't think it only measures about 520 yards or something. Yeah, really nice.
So, hey, I was looking at this 5 here, and I know that it's been acting well. And, would you wait till the market confirms an uptrend to initiate any new positions?
If you're following the rules, and the rules are important to follow, and people sometimes have a hard time following the rules, but my job as a newsletter writer and editor of Ultimate Growth Stocks is to follow the rules whenever possible. So, we are in a market right now where there's enough uncertainty and enough distribution in the market where new buys, I still think there's unnecessary risk or added risk to new positions. So the swing point or the buying area for 5 below was 38.78. Which was its intraday high on February 5th, if you're watching in Tiger TV. So, it's acting well. And, right now at 40.77, you're already at that 5% it's right at 5% past that swing point. So
yeah, you just got to wait for maybe a little bit of shakeout.
Yeah, exactly. And it's not uncommon. I mean, it could pay a visit back to that 38, 78 swing point, and I wouldn't expect if it's as strong a stock as I think it is. I wouldn't expect it to go much below that, but really be predicated on what the market does from here. So
what about CRE? Is that on your radar at all?
CRE. Let me just take a look. That's a CREE, right?
Yeah.
Let's take a look at CRE here. I have to say this one has not been on my radar, but let's just take a look. I mean, this is a strong stock, no question about it. One reason CRE wouldn't be on my radar, I love the growth prospects at this company, but I look at recent sales growth, and I know this is kind of a cyclical chip making companies, kind of a cyclical business, but sales growth has been decelerating for several quarters in a row. So that's the bad news. The good news is that this company this year and next year, you're supposed to see annual earnings growth of 30% or better, and estimates have been going higher. So this is one instance where I may look past that. The decelerating sales growth.
On a weekly, it's trading pretty tight.
It's great. Yeah, and I'm seeing a lot of charts like this. We're going to go over more in this show later. I've got a list of a few stocks that look very much like this. So I totally agree. The technical picture here is strong. It's strong, and very little signs of distribution in this stock. So, but again, you're talking a stock that's only it's 2 weeks into a consolidation. So this is one where you just if it keeps moving sideways and holding gains around this 45 level, you could see a nice little breakout over the recent high, which was 40, probably 46, 47, something like that.
Right.
This is a good one to watch, though. I think technically you're right. I completely agree. It's acting very well.
All right, Ken. Maybe for your next big birthday, you'll get another tea time.
Yeah, I hope so.
All right. Take care. Have a good weekend.
All right, you too.
All right, bye.
Bye. Yeah, CRE looking good, and I'll tell you what. Since we had a watch list of some of these stocks with weekly charts that are looking quite good, why don't we take a look at NationStar Mortgage Holdings? And NationStar is going to be reporting earnings next week on Thursday, so there is some earnings risk here, but this is a very nice weekly chart here. NationStar is a mortgage service provider. We heard from Ocwen Financial earlier this week. Very nice earnings at that mortgage servicer as well. So I'm expecting strong numbers at NationStar. NSM stock right now trading at $39.03. So far for the week, up 2.5%. Weekly volume looks to be coming in higher than the prior week, but you can see the weekly chart here. Good supporting action so far at its 10-week moving average, like the look of NSM, and some of these other weekly charts here looking pretty good. Biotechs continue to work here. And Biogen, BIIB. You can see this stock, a big move in recent weeks, and just kind of similar to CRE. It's just been consolidating gains for a couple of weeks, holding gains nicely. And then there's a kind of a smaller, definitely a more speculative stock, but Multimedia Games, MGAM. Now the market cap here is just over $500 million, but this is a company that makes gaming machines, video lottery systems. But again, you see this big move here back in January, and then just trading tightly, moving sideways. So just a few names out here that we're watching that look very good from a technical perspective. I can't, I'm not going to give up on this rally yet. There's distribution out there. We can't, hammer that point home enough. But we can't rule out the possibility that we could see follow through sometime next week in the major averages. And if that's the case, then we start looking to put some money to work here, nibbling at some stocks with bullish fundamentals and technicals. Checking in on the NASDAQ composite here, about 20 minutes left to go in Friday's session. Right now, the tech index up a little more than 9 points to 3169, still trading near its high. S&P 500 large cap index also near its high. The S&P 500 up almost 3 points to 1517, and the Dow Jones Industrial Average blue chip index holding gains nicely, up close to 27 points to 14,081. So that is what is going on in the broad market here. Shares of Groupon. Remember, Groupon yesterday had a terrible day, disappointing earnings from the daily deals company. It was down 24% during Thursday's session, bouncing back nicely today, up close to 15% to $5.20. After the close Thursday, news broke that CEO Andrew Mason was fired. It has been a tumultuous 4 years or so for Andrew Mason at Groupon, but investors sending shares higher today by 15% on that news. How about, when I was on the air yesterday, I had no idea this was happening because the selling in Intuitive Surgical was going on basically during the last 5-10 minutes of trading. But just an unbelievably brutal day for ISRG yesterday. You can see this just, ridiculous looking price bar here. Stock just got smoked, and it is up, rebounding today, up 8.2% to 551.80. Now, what happened? There was a story that Bloomberg wrote, basically that the company's Da Vinci robotic surgical system is under some federal scrutiny. Apparently, the FDA sent some surveys to doctors asking them how they were trained to use the machine, what procedures the machine was used for. That was on the heels of a report from the American Medical Association last week that said the Da Vinci system did little to enhance the safety of hysterectomies and actually cost more than conventional procedures. So the Da Vinci system's under some scrutiny here, but William Blair and Cantor Fitzgerald came out and defended the stock today, saying this FDA inquiry is a little bit overblown, and that has sent shares of ISRG higher by a little more than 8%. Did have some economic data I wanted to go over today. Personal income down 3.6% for January. That was a little worse than expectations of a 2.4% decline. Remember, last month in December, incomes surged as companies came out with these dividend payments ahead of a tax increase in January. So spending was up 0.2% in January. That was mostly in line. We had a good reading from the University of Michigan regarding consumer confidence. Its consumer sentiment index came in at 77.6, a little better than estimates for 76.3. And the ISM manufacturing index, that was probably the star of the day. That came in at 54.2 in February. The best reading since June 2011 and nicely above expectations. The data follow a strong reading yesterday from the Chicago Purchasing Managers Index, which came in yesterday at 56.8, also better than expected. So, by and large, the earnings data not looking too bad at all in recent weeks. Economic data, earnings, pretty good data flow. Let's take a look at shares of Splunk. Funny name for a company, ticker SPLK. Splunk had their IPO in April at 2012, so coming up quickly on their one-year anniversary as a publicly traded company. Earnings were pretty good. This company came public at $17 a share, trading at $38.92, up 7.7% on the day. This is a data analytics firm, but earnings were up 200% to 3 cents a share, a penny better than estimates. Sales up 51% to $65.2 million. That was more than $5 million above the consensus estimates. So Splunk continues to fire on all cylinders here. Not an easy stock to buy here. In fact, let me just take a look at a weekly chart here for SPLK. Well, yeah, it's kind of getting near a breakout from a first stage base. So this is one where after the move today, I'd actually like to see it drift a little bit lower in light volume, form a handle area, and maybe you get a better opportunity to pick up some shares. I wouldn't chase it here. Keep in mind the market is still a little bit wishy-washy, not clear to me that this recent buying in the market is sustainable. Now, if we do get a big percentage gain in higher volume sometime next week, even the following week, and the market manages to avoid higher volume declines, I'd start feeling a little bit better about things. But anyway, nice earnings from Splunk. Deckers, kind of a troubled stock, but definitely shares finding a bid today. Deckers up 15.6% to 46.73. You actually have a technical breakout happening here for shares of Deckers, breaking out over a swing point here of 45.20. Volume very, very heavy. Deckers is a company that not that big a short position, actually. I thought that short interest would be pretty high here, but they beat the estimate handily. They were expected to earn $261 a share, but they earned $277, down 13% from a year ago, but better than expected. Sales up 2% to $617.3 million. That was a little worse than expected, but Deckers sounded actually pretty optimistic about 2013. They've had to cut prices on their UGG sheepskin boots due to higher input costs, but they have started to raise prices. In fact, they started raising prices last year in October. So market seems to think this could start to find its way to the bottom line. So good day for shares of Deckers. And Gap at last check, having a good day. Shares up 2.7% to $33.80. Of course, Gap, that's their flagship store. They also own Banana Republic, Old Navy stores as well. Earnings pretty good here, up 66% from a year ago. Sales up 10% to just over $4.7 billion, better than expected. Same store sales up 5%. They gave strong full-year guidance. They raised their annual dividend by 20% to 60 cents. So pretty good earnings from Gap. And then let's take a look at Air Lease. Interesting company here, as its name would indicate. They lease jets, Dreamliners, 777s, 737s, wide bodies, narrow bodies. They basically own the jets and they lease them to airlines. And Air Lease having a big day today, up 4.5% to $28.40. Numbers very strong here. They've been very strong for several quarters in a row. No different this time around. Their earnings up 42% to 44 cents a share, 8 cents better than the consensus estimate. Sales up 65% from a year ago to $190.1 million. That was almost just under $10 million above the consensus estimate. Company also announced plans to buy 10 Boeing 777 jetliners for a total price tag of $3.2 billion. It's going to expand its fleet of long-haul jets. Air Lease now has 155 aircraft. One of the big selling points is that these aircraft are young. Only most of them are under 5 years old. So Air Lease having a solid day today. And let's not forget about Salesforce.com. Big day for this stock late Thursday. They came out with big earnings, 51 cents a share, beat the consensus estimate by 11 cents. Salesforce up 7.6% today to 182.07. So solid numbers here. SAP, Oracle, Salesforce.com is really, the player here. Top line growth, some wonder if it's going to be able to continue, but just a solid track record of performance at Salesforce and another strong quarter, stock benefiting as a result. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. Quick check of the markets here as we head into the close on this Friday. The Dow holding on to a 26-point gain, 14,080. NASDAQ Composite up 9 points to 3169. S&P 500 up close to 3 points to 1517. So where are we at? Today is day 4 of a rally attempt for the major averages. We'll keep an eye out for some follow-through signs of a new uptrend, kind of clues from the major averages that this buying that we've seen this week might be believed, and we want to just see a sign of strength, a big percentage gain and higher volume sometime next week. If we get that, that'll make me more comfortable about nibbling at some stocks here. But definitely, seeing some nice movers today. Mentioned Salesforce.com, nice breakout for that stock, even though it was looking a little unsettled ahead of earnings. Biogen IDEC, check in on BIIB. Also showing relative price strength here. Biotechs in general looking very strong here, up Biogen is up 1.2% today to 168.40. There was a story that broke right when I was about to go on the air around 3 o'clock Eastern, maybe 2:30, 3 o'clock Eastern, that Bristol Myers has been looking at a big acquisition, and that Biogen may have been one of the targets. I don't know if that's an unsubstantiated rumor, but it did result in a big pop in shares of Biogen with about an hour left in today's session. So it's still holding on to gains, up 1.2%. Some other stocks here that we're watching. Still like the look of Shutterfly here. Shutterfly. Let's check in on Shutterfly today. We'll see Shutterfly, trading tightly. Actually cleared some resistance this week. For the week, it's up 4.2%. Last trading at 43.38. So, liking the technical action in Shutterfly. And CERN making a case. It's trying to break out here. Another stock that has been holding on to gains. Looks, you can see volume down here. Weekly volume set to come in higher than the prior week. Looks like a close near highs for Cerner. So this one trying to come out of a big base that started early last year, maybe around the springtime of 2012. So Cerner acting well. This is a healthcare information technology firm. So don't forget, folks, Ultimate Growth Stocks, you can get a 30-day trial to my newsletter. We currently have 3 open long positions. Next weekly update will be Tuesday. Refreshed watch list. We'll comment on current holdings, go through economic data, earnings reports, all that good stuff. Right on the homepage of TFNN.com, click on the newsletters tab and then investment newsletters. You can check out 30 days free of Ultimate Growth Stocks. Next week, not that busy a week of economic data, but we do have the jobs report next Friday. Non-farm payrolls will be out Friday. Before that, really not much. We have the beige book on Wednesday, factory orders, so it's really just going to be about jobs next week. Some interesting earnings reports on the horizon. On Monday, we're going to hear from Stratasys. Remember, 3D Systems came out with earnings that, on the surface didn't look that great, but Stratasys has been under quite a bit of pressure ahead of its earnings report on Monday. Stock is up 1.4% today to 64.02, but recently, earlier this week, I should say, it did fall below its 200-day moving average, so it has been lagging the market badly. Lots of other earnings reports to get to. Busy week for earnings next week. Coming up next, the Tom O'Brien Show. Hope you have a great weekend, folks. Be safe. I'll see you back here on Monday, same time, 3 o'clock Eastern, for another edition of Breakout Investing. Take care.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.